Hello everyone, hope you all are doing well. I'm Yash Paliwal, welcome you all to ohho Paisa. In this video, I'm going to tell you about income statement, its meaning, components and format. But before moving ahead, if you haven't watched my previous video on Introduction to Financial Statements, the link is in the description. Check it out. That video will give you understanding about what our financial statements are and what are the objectives behind preparation of financial statement. And one more thing, if you are new to this channel, don't forget to subscribe to get future such videos. Let's move ahead with this video, how to prepare income statement. Let's start with what is income statement. Income statement is one of the company's core financial statement that shows their profit and loss over a period of time. And the profit or loss is determined by taking all revenues and subtracting all expenses from both operating and non-operating activities. Now, before moving to understand components of income statement, understand one thing. The income statement may have minor variations between different companies as expenses and incomes will be dependent on the type of business and operation the organization is into. But there are some generic items that are commonly seen in any income statement. And those items I am going to tell you under the components of income statement. Let's move to understand components of income statement. In that first is revenue or sales. Revenue or sales is the company's revenue from sales or services displayed at very top of the income statement. This value will be gross of the cost associated with creating the goods sold or in providing services. Next, cost of goods sold. COGS is an item that aggregates the direct costs associated with selling products to generate revenue. This can also be called cost of sales if the company is into service business. Direct cost can include labor, parts, materials, and allocation of other expenses such as depreciation. Next, gross profit. Gross profit is calculated by subtracting COGS or cost of sales from sales revenue. Next, marketing, advertising, and promotion expenses. Most businesses have some expenses related to selling goods or services. Marketing, advertising, and promotion expenses are often grouped together as they are similar expenses or related to sellings. Next, journal and administrative expenses. The journal and administrative section that contain all other indirect costs associated with running the business. This includes salaries and wages, rent and office expenses, insurance and travel expenses, and sometimes depreciation and amortization along with other operational expenses. Next, EBITDA. While not present in all income statements, stands for earning before interest, tax, depreciation, and amortization. It is calculated by subtracting selling, general, and administrative expenses, excluding amortization and depreciation from gross profit. Next, depreciation and amortization expenses. Depreciation and amortization are non-cash expenses that are created by accountants to spread out the cost of capital assets such as property, plant, and equipment. Next, operating income or EBIT. Operating income represents what's earned from regular business operation. In other words, it's the profit before any non-operating income and non-operating expenses. Interest or taxes are subtracted from revenue. EBIT is a term commonly used in finance and stands for earning before interest and taxes. Next, interest. Interest expenses. It is common for companies to split out interest expenses and interest income as a separate item in the income statement. This is done in order to reconcile the difference between earning before interest and tax and earning before tax. Next, other expenses. Businesses often have other expenses that are unique in their industry. Other expenses may include things such as research and development, stock-based compensation, gains and loss on sale of investment, foreign exchange impact, and many other expenses that are industry or company specific. Next, earnings before tax, also known as pre-tax income, and is found by subtracting interest expense from operating income. This is the final subtotal before arriving at net income. Next, income taxes refers to the relevant taxes charged on pre-tax income. Next, net income is calculated by deducting income taxes from pre-tax income. This is the amount that flows into retained earnings on the balance sheet after deductions for any dividends. That's all about components of income statement. Let's move ahead to understand the format of income statement. Friends, now I'm going to explain you format of income statement. First important thing, mention the heading as the income statement. Below that, mention the name of the organization, and below that, mention the period for which you are preparing the income statement. Now comes to the calculation part. First, you have to calculate net sales or revenue of the organization. This is net sales or revenue of the business by selling goods or providing services. Then comes to cost of goods sold. So, cost of goods sold shows the direct cost associated with selling goods. So then next comes to gross profit. You will get gross profit by subtracting cost of goods sold from net sales. Now comes to operating expenses. In operating expenses, mainly there are two heads, selling expenses and office and administrative expenses. Under selling expenses like carriage outwards, discount allowed, commission allowed, traveling expenses, entertainment expenses, sales and promotional expenses like that. And under office and administrative expenses, salaries and wages, rent, rates and taxes, repairs, insurance, printing and stationery, water and electricity, postage and telegram, etc. comes. Now subtract operating expenses from operating profit will give you net profit or loss of the business from the operating activity. Now in business, there are some non-operating activities. These are the activities which are not related with core operations of business. Let's move ahead to calculate the net non-operating result. Then next step is first calculate non-operating income and gains such as interest earned, commission earned, discount earned and miscellaneous incomes. Then calculate all non-operating expenses and losses such as interest allowed, loss on sale of fixed asset and etc. Then from non-operating income subtract non-operating expenses will give you net non-operating results. If your net non-operating is profit, then add it to your operating result, or if it is loss, then subtract it from your net operating results. Will give you earning before tax or your pre-tax income. Now to arrive net income, you have to subtract income tax from your earning before tax. This will give you net income. This is the amount that flow into your retained earning on the balance sheet after deductions for any dividends. And you can also refer this table to remember the sequence of activities how to arrive at net income. Friends, that's all about how to prepare income statement. Hope you understand. If you have any query, doubt regarding this video, let me know in the comment box, or you can directly write us at ohhopaisa@gmail.com, and stay tuned for the upcoming video, cash flow statement in detail. If you like this video, do subscribe, share ohho Paisa, and don't forget to subscribe to get future such videos. Thank you so much for watching. Be happy, healthy and wealthy. Thank you.